So we started last week talking about efficient markets. Um, I very much encourage you guys to take a look at that replay up on YouTube at youtube.com/storytrading on efficient markets. We'll recap it here at the top of the hour a little bit for people who missed that conversation on efficient markets, because it does dovetail nicely into the topic we're going to be talking about tonight, which is story charting. That's a unique methodology that story trading espouses in terms of how to research and trade stocks. So very excited to get into that conversation. But first, I want to harken back to the discussion a little bit on efficient markets. And basically our position in story trading is that markets are efficient. And we believe your position on that, whether it's efficient or inefficient, has dramatic impacts and implications for how you research stocks and how you trade. And we think if you have a mindset that markets are efficient, you can actually make much, much better trades. And that may seem counterintuitive to a lot of people, because people say, oh, if you believe markets are efficient, there's nothing to take advantage of, right? There's no information arbitrage. If prices are always stocked perfectly, then how are you making money? So, we really dove deep into that last week, and we'll touch on it a little bit today. But first, a little bit of a clarification. There are people who, take exception with our usage of the term market efficiency, citing that there is a very specific meaning for efficient market theory, and what we're talking about is not efficient market theory. Well, I think there's problems with both the inefficient market theory and the efficient market theory, and what we're espousing is not exactly either one of those things. But we're here to disrupt how Wall Street thinks of valuation. Story trading, we believe, brings a very unique perspective in valuing markets. And, when we say markets are efficient, we are trying to really redefine that a little bit. Want to redefine that and disrupt how markets and assets are valued, and bring that to all of Wall Street, to traders, to hedge funds, to institutions. That's really our ultimate goal with what we're trying to do. And, so we talk about there's two real things in efficient market theory. One is that information flows, to everybody. And for the most part, we do believe that. There are some exceptions. You could definitely say maybe with, small caps or micro caps, it doesn't flow as much. There's an information arbitrage there. You could maybe say that for various reasons we talked about last week. I really don't believe, though, that makes a difference. But then the second part of efficient market theory is that therefore there's no profit opportunity. And that one we really disagree with big time, right? Because the implication there, when you say if all of the information is to all of the market participants, then everyone would behave the same way, that's totally missing out, a big part of the equation, which is who is digesting that information, analyzing that information, interpreting it, and making a choice whether to buy or sell a stock on the same piece of information, right? So you can have lots of different opinions on the same exact piece of information. So, it doesn't flow, and it's not accurate to say just because information flows, therefore the price is the price. That's not really what's going on. Now, the thing we really take issue with are people who believe in efficient market theory. And this is why. Because people who believe that the market is inefficient, without exception, I've heard these people say that everyone else is irrational and everyone else is dumb, and therefore pay no attention to markets, right? Therefore, I'm the only smart person in town, and 99% of other people are all irrational and dumb. And that's the necessary, conclusion of inefficient theory, at least in practice, that I've seen. And that's really what we're railing against. We believe the exact opposite. We believe markets are 100% rational at all times, okay? And that everyone is right in their opinion. Everyone is justified, and everyone, has a valid reason for having the position they have, the thesis they have towards a stock in that given moment, right? Who are we to say they're wrong, right? So, when it's interesting when we talk about the market is rational. Why? Because emotions are rational. Because we're human beings. We're not computers. We're not a spreadsheet. So it's rational for human beings to have to get excited about something and speculate that, hey, this company is going to be huge in the future. It's rational for a human being when there's some macro event, that, oh, inflation's going to be super high or whatever it is, that a lot of people at the same time may all of a sudden have a different view on what their asset might be worth in 2 years, and they might want to, hedge or take some off the table. That's perfectly rational, right? So that's why we're coming off with, what we believe is efficient theory, because that's the exact opposite of everything everyone else believes when they talk about inefficient theory. And why is this so important? It's important because, again, the implication of inefficient theory is I'm not going to pay attention to what the rest of the market is doing. The rest of the market, they're all dumbasses. They're all stupid. They're all irrational. Doesn't matter what they do. Only thing that matters is how smart I am and how good my spreadsheet is. Well, that's a very dangerous thing. So, we talked about that a little bit, teasing why that's important, and that really dovetails into story charting. And the beautiful, wonderful, amazing thing about believing in efficient markets and believing in rational markets is that when you look at a chart, you can learn so much information. You can start to get amazing insights into what are the catalysts that are good for this stock? What are the things that are bad for this stock? What's the investor base think about this company? You start asking questions. You get rid of your confirmation bias. You may start getting curious about what the bear points are on a stock. So, I'm going to pause right there, Jared, for a couple of your comments before we kind of get deeper into story charting.
Hi, can you hear me?
Yep.
Okay, so yeah, that is a good recap of what we talked about last time. I think that there is kind of people can get hung up on the word efficient. I think there's kind of a broad question is, does price action matter or does it not matter? If you start with the, implication, this bank is worth $10 a share and the bank is trading at $9 a share, you think to yourself, well, that price action is irrelevant, or you may even think to yourself, the fact that these other people are irrational and are valuing at $9, that creates this opportunity for me to buy it. And over time, the market is a weighing machine, and it will eventually get to that $10 target that I mapped out. And I think that that's just not the way things actually work so often. I think we talked about that a little bit, that things don't just seem to naturally float to one specific number that can be calculated with a spreadsheet or something like that. There's other factors involved. Some stocks are undervalued for a reason. Some stocks are quote unquote overvalued for a reason. And so I think if you ask this sort of broad question of like, okay, if price action does matter, what is the best way to gauge price action? And I think it's pretty obvious. The best way to gauge price action is a chart, because a chart is just a measure of price action in the past.
You brought up a great point about that person who thinks, hey, this stock should be trading at $10, but it's $9. Let's make it $5 for a greater, understanding here. So you have a stock that's trading at $5, you think it should be worth 10, right? So that person says, hey, I'm holding a $10 bill for $5. Number one, why should I sell it, and why shouldn't I buy more of it, right? The problem with that is, again, why isn't it 10 yet? Why is it still at 5? And what you're really doing when you're making that bet and you're making that purchase at $5, you are speculating. You are speculating that X, Y, and Z needs to happen in order for the stock to get to 10. Now, you may not know this. Maybe you're subconsciously speculating. But when you think you're like grounded, you're looking at a spreadsheet and saying, hey, this is worth $10, but hey, buddy, they still need to print it. There's always risk it doesn't get printed. And there's also a lot of other assumptions you're making and other bear cases. There's a lot of things going on there. So really, when we're placing a trade, whether you're a fundamental investor, a catalyst-based investor, sentiment-based investor, technical trader, everyone, all the time, at all times, they are speculating on what can happen in the future. And that's the opportunity, right? When people say there's no information arbitrage, oh, if you believe in efficient markets, how do you make money? Because I'm not trying to take advantage of any arbitrage. I'm trying to speculate about the future. And you can be a better speculator than other people through proper analysis and through better research and through experience. You can speculate better than other people. And that's the opportunity to make money. And for the pure fundamentalists, that's one way to speculate. They're speculating based on the DCF analysis, and they're speculating the company will execute, and they're speculating, they will make money next quarter and the quarters after that. And they're, but it's still speculation, and that's no different than traders or investors who are speculating based on technical analysis or based on sentiment factors or catalysts. They're also speculating. So it's all a speculation game. That's what the markets are about.
Yeah, I agree.
So with that, what do we mean by story charting? Now, this is something that we are going to try to scale eventually with the app we're building. It's in private beta right now. And it's an ambitious multi-year project that's probably going to cost multi-millions of dollars to really do this, because what we're doing is really groundbreaking and unique. But I'll tell you how I did this individually before we really got into the story trading community. When I research a stock, one of the very first things I do is, like everyone else, look at the chart. But then you ask questions on that chart, right? Why did this stock go up in 2005, like 300%, and then crash 50% in 2006? What happened there, right? And to me, this is one of the most important questions you can ask, even perhaps more important than the fundamentals, because you need that context to understand what is going into that fundamental model, what's going into the business model, into that DCF analysis, right? Again, all these assumptions of what's good for the company, what's bad for the company. Well, you can only learn those assumptions if you start researching what's good for the company and bad for the company. And the best way to do that, the biggest shortcut to doing that, is looking in the history of the chart, looking for big moves, right? And asking questions. Now, we've demonstrated this in a bunch of our Benzinga videos with SMSI and with VTSI, that with crowdsourced research and social collaboration, I mean, almost every appreciable move, I'm not talking about intraday little blips here and there, right? But even the sharp intraday ones oftentimes can be explained. But through that collaborative process, we can get enough information to annotate charts, right? To explain why it went up here, why it went down here. You have event anticipation runs, you have event reaction runs, you have lots of information, some of them not in press releases, some of them, circulating in social media communities, right? And you have other factors like sentiment and sympathy moves and macro events, but everything happens for a reason. And by pursuing those reasons and finding out why the stocks are moving up and down, you become a much, much, much smarter trader. And let me give you a specific example with Air, right? Air just recently, which went from $2.70 when I presented it as an inflection trade, and went to $27. Why was I so confident in that? What was the magic of that? The magic was, you go back and look at the chart and you see several years ago, the stock spiked like 3 or 4 times, and then it gave it all back in the ensuing like 12 months after that. And that was the most important piece of research, which I had asked in our community. I actually asked Ashley, who originally presented this as a VIP pick. I asked him, Ashley, what happened back then? Why did the stock, explode and then give it all back? And he said, well, that was because of excitement over an Apple order, right? They partnered with Apple, and, everyone thought, hey, they're going to get this Apple business. But it soon became apparent that this Apple business was not recurring. Now, why wasn't it recurring? So you have to ask questions. Why? Why wasn't that business recurring? So he did the research, and he found out that Apple ended up using Air's test system to simply qualify their production process, to make sure that what's coming off the production line is good. They did sampling, basically, right? They tested a sample of them, and they said, hey, it's 100% accuracy here. We don't have a production issue. And once they validated that, well, they didn't need to use Air anymore, or they just did sampling all the time to try to catch mistakes. But that's very low volume, not a lot of money. So what happened? What happened was, that was the big question. That's the history. Now we know what causes the stock to go up and down. They needed sustained, repeatable business that's for production, not for sampling, meaning every single chip, every single semiconductor needs to be tested. And that's the inflection for the company. So what happened? There was a press release when the stock was like 270, and I've been looking at this for about a year, but basically every single press release that comes out, I'm like dissecting the words, and I'm waiting for evidence for them to say that definitively every single chip that's coming out of the production line is going to have to be tested. And that's what happened. That's what was very clear in the wording when they said they got these and to boot. It was sent. I mean, this was a perfect storm, like almost a once in a lifetime opportunity. Then he had the sentiment of EV, right? So he had the press release saying this is EV. It's being used for production, not just sampling, and we expect recurring multiple orders. So because I knew what the investor base of Air was worried about, they went through that history, right? They went through the boom and the bust, and they lost money, and that's what they're worried about. So as soon as I knew that this issue was resolved, right, when you fix the problem, that's the inflection point. That's when you go all in. And this is the timing part of it, right? Some people say, "Oh, Ben, you can't time markets." No, I disagree with that, right? Inflection points is how you time markets. Catalysts, when you understand what's important to the market, what are their concerns, and if and when that concern gets resolved, dude, that's timing. You jump in, all hands on deck, man. Back up the truck, right? So, in a nutshell, that's story charting. It's the practice of going into the chart and looking for why the stocks go up and down in order to understand the investor base, the concerns and the hopes and the fears of the investor base in terms of what is going to make this a great company. So I'll get more into the details of that, but I'm going to pause one more time for Jared for you to jump in.
I think a lot of times when people say, "Oh, you can't time things," I think there's kind of a misunderstanding that applies to like individual stocks and the whole market. If somebody said like, where is the S&P 500 going to be 1 year from now? I would be hard pressed to issue a prediction. I don't exactly know, because there's so many factors that go into that aren't really, that aren't really predictable. However, if you're looking at something that is, has a smaller set of parameters, you mentioned Air is a really good example in which you actually can look and see what causes it to go up, what causes it to go down, and it's a similar set of things, then that allows you to be able to have more confidence in what's actually going to happen in a short time frame. And yeah, I mean, I think why wouldn't you want to try to do that?
I'm sorry, was the very last thing you said there?
I said, why wouldn't you want to try to do that?
Oh, right. Why wouldn't you try to do that? Sure. So, absolutely. So now going to the chart specifically, we know there's 4 pillars that we talk about at story trading: fundamentals, technicals, catalysts, and sentiment. And they're all in there in the chart, right? So these are the 4 factors. Like, so basically all of that price action can be explained by these 4 pillars. There's nothing random about it, right? There's nothing mysterious about it. At any point in time, you can go look and say, on this date, the stock was $30, and that $30 was priced because of a combination of the net market opinion on fundamentals, technicals, catalysts, and sentiment. And you can go into that chart and look for these catalysts. And when we say a lot of times, it's not the catalyst, is the sentiment change. In a way, everything is a catalyst, right? Right. The technicals change. That's a catalyst. It reached support. It reached resistance. Technicals are good for support and resistance, but they don't tell you why it broke resistance or when it's going to break down support. All that is coming from the sentiment and the fundamentals and the catalyst. But so you go into the chart and you're reviewing all of this. You have to do your due diligence. There's no shortcuts here. You should look at the fundamentals. You should look at how much money they're making. You should look at the earnings every quarter. What's happening with the earnings every quarter? What's going on with the revenue and the earnings and the cash flow? And did they raise money? All of that's important, and all of that's in the chart, right? Same thing with the technicals. Look at it. Look at the 200 DMA, the 50, the 20, the big items over there. Look at big volume bars. This is all telling you a story, giving you clues of what's going on. And the sentiment as well. the sentiment, like let's say EVs are really hot, right? So you can annotate that in a chart. There may not be a specific company reason why a stock did really well during some, 3-week period in quarter three, but you can attribute that to strong sentiment, tailwinds from strong sentiment in the EV sector, and you can annotate that on the chart. If you do this exercise, I guarantee you will become like a master in the stock, and you can play it like a fiddle, man. You could like screw with everyone. Like you can make so much money because now you can anticipate how the stock is going to react. And I'm not going to lie to you, it's hard to do this, right? And to become like a master in one very specific stock, I'm hard pressed to do that now because I spend most of my time running this business and trying to build a community and our app and everything. But when I was just focused on trading and investing myself full time, I became an expert. I would go and read. Well, let's say you want to go to a specific date and find why did the stock explode. You know what I did? I didn't just look at the press release. I didn't just say, oh, there's news. I would go to the timeline and you know how time consuming this is? You go to StockTwits and try to scroll back all the way to a specific day, right, to find out what people are talking about. And sometimes you have to do that because there is no press release. It was some event that didn't make the wires, right? Do the same thing on Twitter. Hey, go to Investors Hub and do that. Do that on Yahoo message boards, right? It sounds like a lot of work, and it is a lot of work. But guess what? When you do that, you will become the smartest person in the universe on that stock, and you can start anticipating moves before events. And very importantly, you can anticipate the crowd reaction right after an event happens, right? And that's how I've made all my biggest money. Air was the biggest example, but going back and there was another example of an oil company I had watched for a while. I had held it. I lost a little bit of money. I'm like, what's going on here? So I did all the research, and it took me a long time of research to get into the message boards to find out that there was disappointment over a specific lease of some land that they had lost the rights to, which was never in any press release, but it was like tucked away in a 10Q somewhere from like years ago, and people were like very negative on the stock because of this. So I said, oh, that's why I lost money. I didn't understand that this was an issue. Well, now I knew it was an issue, and I just kept it on my watch list. I wake up one morning and I see a press release that they regained the rights to that land. I don't know if it was a legal dispute or what the issue was. I forget. But then I knew, dude, everything got resolved. I jumped into that stock within like 5 seconds, as fast as I could, fast as I could. I piled in, and then the market freaking loved it, and it went up for like 3-4 weeks in a row. The stock went up from like $2 to $10 in like 3 weeks. That was another example of, how you benefit from knowing everything about the stock, telling you how you should and can react when a catalyst hits. Any questions to that? By the way, feel free, if anyone has any questions, you can hit that mic request button on the bottom left. We're happy to take any questions on this topic. So, in a nutshell, that's story charting. That's my presentation on this right now, so we can stop and discuss it and take some questions. Jared, you
Well,
still with us?
I'll
Yeah.
go ahead and ask sort of a devil's advocate type question.
Sure.
Let's just say that I am looking on a chart and say that there's like it's in a downtrend. How do you know when the stock will stop being in a downtrend?
Well, okay. Well, like I said, it's a combination of all four pillars. So when a stock is in a downtrend, yeah, technicals are important, number one. So the first thing I'll do is look at those technicals, look at those key support levels to see where it might stop being in a downtrend. But typically, it's not going to go into an uptrend all by its own. It's still, sometimes it'll get to the bottom of the channel and just stay at support for a while, right? And sometimes it'll break down support if the fundamentals are not good. So, saying how do you know when the downtrend is going to end? I would say when first of all, things do trade in ranges. I'm not discounting that. You could have technical ranges, you can have maybe fundamental ranges like Mark Gomes likes to do. But if you're looking for the big money, for those inflection points which turn the business around and turn the bears into bulls, right? That kind of stuff, you just have to wait for the right catalyst to come around to change the story. Jared, are you still with us?
Okay, sounds good.
Yeah. See, I think there was one other thing I wanted to mention on this. The technicals, fundamentals. Yep. No. Oh, yeah. The other thing I want to say is, look, this doesn't mean you're always going to be right, because you still have to do the research comprehensively, and you may miss something, and you may interpret something incorrectly, right? So I'm not here to say that if you do this method, you're going to win 100% of the time. No, first of all, you'll never win 100% of the time, right? You only need to win 60, 70% of the time to probably crush the market, first of all, right? And then, also, as I said, a lot of this is analytical, and you need experience in that, right? To analyze and learn how do markets react to certain catalysts. So there's a lot there. It's a big learning process, and but I think it's very fruitful. I really attribute most of my outsized gains in the last 2 or 3 years to timing, overweight and underweight positions, my allocations, right? So we have story trading, we have great stocks that are presented as VIP picks to community, and that's great, right? Because we want strong fundamental companies that you don't have to worry that are going to crash to zero all of a sudden. So that's good, right? But most of my outperformance, and gosh, I mean, I've really outperformed all my accounts are up like 3, 4, 5 times, in the past year to 18 months. In the past 5 years, I'm up 1,000% across the board. But most of that was driven by timing. Most of it, right? Where I would go overweight or underweight certain periods, and I would maybe take a little bit of risk, go into a little bit of levered options, right? In the money options, going into an event or reacting to an event very quickly, because I have a good sense of how the market's going to react to a certain piece of news. So that's the story trading part of it, right? When you understand the story, you can get your timing better, you can get overweight and underweight at the right times, and really maximize your returns. So it's definitely a different method than pure technical trading, different method than fundamental investing, and I love it. I'm passionate about it, you know. So yeah, any questions, guys? I'm happy to answer, and we can even go into specific examples if you'd like. If there's a specific stock from the story trading community, we can talk about the story charting in relation to that. We got a question here or comment. Yeah, Ramat, go ahead. And Steve will come to you next. Actually, Ramat, you hit the mic, you're on mute. Maybe I'll need some time to find that mute button. So Steve, go ahead.
So I've been watching TRT. I just jumped on this podcast. I don't know what you guys were talking about before, but I wanted to ask you guys about TRT, and I just read their 8K on their website, and I'm really bullish on it. They seem legit and like they will be somewhere in the future. What are you guys looking at on your end?
Yeah, well, let me first we've been all over TRT doing a lot of research, but let me tie it into tonight's talk a little bit first. So in TRT, Couple things you see on the chart. If you pull out this company's been here for like 20, 25 years, right? Or so publicly. They've been around for 60 years. But there's two things that you can see from a story perspective right away on the chart. One is that over this 25-year period, they've had a very strong support level, somewhere in the $3 or $4 range. And for a company that's a $30 million market cap, that's extremely rare because these tiny market cap companies are usually serial diluters. They're constantly selling shares, and over a 20-25 year period, you'll see the stock price declining over time. Even though the market cap may be stable, the market cap may be going up, but the stock price will keep on declining because they're small and they're losing money, and they have to constantly raise cash. So that was curious to me. I saw that stability. So I went into Y charts and I researched the outstanding share count, and I found that they do not dilute. This is a company that, is responsible with, in regards to their shares and shareholder value and the share structure, and they just don't dilute, which is pretty cool. So that's one thing I really, really liked about the TRT chart that you could see there. The other thing that we still need an answer for is they had a huge spike. On my mobile, I can only go back 5 years. So you have to go to a monthly chart and go like 25 years, which I can only pull up on a desktop, which I don't have available right now. But if you go look at that on TRT, go to an all-time chart, put monthly candles, and you'll see somewhere in there they had a huge run to like the 20s, mid-20s, and it came back down. I would like to know the answer to that. I would like to go back, and I didn't do this research yet, and find out what happened back in that year. Why did it go up that much, and why did it go down? You might learn something that's going to give you a huge edge in terms of how to react to the stock going forward. So that's the story part of it. Now, everything else about TRT, there's they did 23 cents. So that's the fundamental pillar. People are looking at 23 cents, looking at the share price and saying, damn, this thing looks cheap. They're looking at the revenue of 10 million, right? And they're like, man, this thing is like trading at one-time revenue. This looks like it can go up many times. That's at least the perception of the fundamentals, right? And then you have the sentiment, obviously, which is semiconductor testing, which is very, very hot space right now. So people are excited about the TAM and the growth in semiconductors. So that's a tailwind for what this stock might do, right? Then you have the catalyst of not just earnings that hit. So you have an event reaction, but you also have event anticipation of a possible big deal because they've been teasing this big customer that they may win for semiconductor testing, right? So that's 3 out of the 4 pillars. And then you have the 4th pillar, which is the technicals, which, I'm not a technical expert. I'm pretty good, actually, I do think, but I think Rex is even better, our colleague Rex, man. And he's looking at this, and he specializes in supernova moves. Stocks that very rapidly basically go up 1,000% in a short amount of time. And there's no guarantee. He's not saying this stock will do that, but he said this stock is a candidate to do that. Given the share structure, given the price action so far, he says the very similar price action to those big moves that were in Marin, MRIN in the past, and HMNY, and even in AIR. He says lots of similarities, and his thinking there is a chance this goes to the 30s. I will say, caveat, right? That asterisk. The fundamentals, we have a lot of people in our community who are strict fundamentalists, and they're really good with, looking at these 10Qs and 10Ks and financial analysis. They look at it and they say, wait, hold on a second. This is not a strong company. They don't have the IP patents that AIR has. They don't put a lot of money in R&D, which is usually a red flag. AIR spent a lot of money in R&D for years. So that once they do inflect, that means they have a product that has a competitive advantage and can keep growing. So this company, they don't really have the IP, so maybe they don't have a competitive advantage. So maybe their earnings will not sustain. So that's what the skeptics are saying. And my answer to that is that's not a direct conclusion. That's an inference, right? So I would want to speak directly to management and find out, what's their business look like? What is this big deal you guys are talking about doing? So I'm not writing off fundamentals, which is one of the 4 pillars. I think at least superficially on the surface, it's very obvious that most people in the market are going to look at 23 cents and 10 million revenue and say this thing's cheap. And then you got the other three pillars of sentiment, catalysts, and technicals, which are looking really good. So in my eyes, TRT is a great trade. And especially because they don't dilute, right? So my downside is only like 50%, right? If this thing, I buy it at 9, I got in at 770, but it's not going below $4 or $5. You can see that historically. It's not. And my upside could be $30 or more if this does a supernova. So, I like TRT as far as a trade, but in deference to the people in our community who are the strict fundamentalists, I will concede to them that, yeah, this is not another AEHR, in terms of quality of the company, probably not, because of the R&D situation, probably not. But it doesn't mean price action wise, it's not going to be another air because of all the other factors I just laid out. So I very much like this as a trade.
Wow, thank you for all that information.
Sure, Steve. Ramath, your mic is now unmuted.
Yeah, hello. Do you hear me?
Yes.
Yeah, okay. I have a question from Ben. The air, I remember that 1 week ago, he took it off the VIP list at $26, and since then it has been going down. I just want to know, how did he know that to make that prediction? It was a very, very tiny, prediction. How did you know that?
Well, I could be wrong, but at the time when I took it off of the VIP list, the reasoning I gave, and I went on Benzinga and I explained this, I was looking, as I said, I'm looking at all 4 pillars. Like, I like to look at stocks holistically. So I saw something in the technicals then, and also something in the sentiment that caused me to basically close that out. The technicals was the day before. I closed that out on a Monday morning. The Friday, the day before, was the first time ever in this entire run that the candle, the green candle, when you look at a chart, it was a closed green candle, a filled-in green candle, rather than open green candle. If you look at a candlestick chart, what does that mean? It means the stock closed lower that day than it opened. And that was the first time in 4 months that happened. I mean, when an event happens only one time in 4 months, it's significant, right? For a green day, I'm sorry. It was the first time it happened in a green. There may have been red days where it was down, and it closed lower than the open. But as far as a day that it was up, right, it closed lower than it opened, which could mean that was a top, right? You reach the top early in the morning, and then you sell off in the afternoon. When the stock is strong, you get maybe hedge funds, you get people with deep pockets buying throughout the day. Here, you have people selling throughout the day. First time that happened in 4 months, my technical indicator. Then you have sentiment, which, first of all, before the sentiment, all this time that the stock was going up to like 27, I knew at this point it's overvalued fundamentally, right? But because of the strong sentiment in the EV space, because of the technicals, it was riding above the 20 DMA. By the way, today it touched the 20 DMA, but it had a very strong trend, right? So the technicals are great. The sentiment's great. Why sell it? This thing can keep going. So I didn't sell it based on the fundamentals being overvalued. But once other pillars start breaking, then all of a sudden fundamentals matter, right? And, so the sentiment part of it, I'm looking for breaks, right, in the sentiment, technicals, and catalysts in order, again, because I know the fundamentals are overvalued. So I made a bet, besides that technicals, I made a bet that week, which was last week, would be peak EV hype, right? Because of Elon Musk that weekend saying he's going to sell 10% of his Tesla shares. And we all know conventional wisdom is Tesla is very expensive at $1,200 or wherever it hit. And then also that week, there was a Rivian IPO, and we recently had the Lucid situation right before Rivian. So I said to myself, this is peak EV sentiment. It can only go down from here. So, and by the way, there were also some big insider sales. So talk about catalysts maybe. Just before that, at this point, all of management basically sold off 50% of their shares. Now, at $16, they sold off like 33%. Then, a few days before I closed it, they sold off like another 17%. So I had all of these things. I'm looking at holistically. Insider sales, peak EV sentiment, the technical candle change, I know it's overvalued, and I'm just looking for an excuse to get out at that point. That's why I called it. Now it turned out that wasn't peak EV week. I was actually wrong on the peak EV sentiment. Maybe for Tesla it was, but EV has been on fire still this past week. Now I think I was maybe a week early. Maybe this week is peak EV week. Is he lucid turning back now? And I don't know, but so it was a combination of all those factors. And I would warn or just point out that air for the first time now during this entire run has touched the 20 DMA, 20-day moving average. And the 20-day moving average is a very, very important line for stocks that are in short-term bull markets. So if this breaks below the 20-day moving average tomorrow, like if it does not rebound hard tomorrow, stock's in trouble, I think. I think the stock can go down several dollars more if tomorrow is a red day. So yes, I could be wrong, but that was my reasoning for it.
Thank you.
Yep. Jared, you got any story charting stories for us?
IonQ. What's your take on IonQ? Do you think there will be a pullback, or is this going to
Yeah, I wanted to talk a little bit about TRIT. Sorry, by the way.
I'm sorry, but
sorry,
what?
There's a bit of a delay on my microphone for some reason. Sorry, I interrupted someone.
Oh, right. We just had a question about IonQ. I've heard about. I saw the chatter, but I didn't look into it until right now. Actually, I'm looking at the chart. I see this thing went from $20 a couple days ago to 31. Yeah, what a chart. I really don't know. It looks like it was probably a SPAC. Yeah. Quantum computing. Why don't you tell us a little bit about Steve IonQ? I don't know much about it. Did we lose him? All right, looks like he fell off. And we lost Jared. All right. So there you are. It looks like some people were having some internet connectivity issues here. All right, we'll come back to you, Jared. Trader Maker, you got a comment? I don't know if it's me or you guys. Having people keep coming in and out all of a sudden. So, Jared, there was a question from Steve on IonQ. Yeah, Trader?
Yeah, I just have a quick question in regards to prod. It's been making a lot of news, on social media.
What's the ticker symbol?
PROG.
Okay.
The volume's been insane. It's 99% dilution. And I don't know. I mean, listen, I'm fairly new at this game and I'm trying to learn it as best I can. But when you see a stock that was like $3 and goes up to $6 in 2 days, and it's being shorted. I think it's number 2 shorted on Fintel. So I was kind of curious how someone can make an analysis on a company like this that can be so volatile.
Yeah, I'm looking at it now. I'm not familiar with PRG, so I'm looking at the chart for the first time. And I can tell you, like what I said before, it's not easy. If you want to make big money, you got to do your homework. So you got to look at the chart, look at the history there, what caused it to go up and down, look at what they do, learn about the fundamentals. I can't give you an easy answer, but I will tell you that the market's hard. And if you want to outperform, you got to put in the time and you got to study and you got to learn the fundamentals, the sentiment, and the catalyst. Now, there's a little bit of a shortcut to that when you're part of the story trading community. You get the benefit of 200 other people doing that research alongside with you. And
yes, it's true.
So, that's kind of the shortcut that we do in our community.
I mean, they are saying that it's a possible takeover with Pfizer, and there's a whole lot of hoopla with that, but there's no confirmation. And I just got done looking at some of the 10Qs and trying to understand the fundamentals and things like that. But it's it's something that's going to take some time. This, when you try to understand fundamentals and how to really break down a balance sheet, it's I've been online, I've been on YouTube, and it's not the most easiest thing to do. It's going to take a lot of time and patience, and that's fine. But basically, I do a lot of Twitter and my own due diligence, looking into the company and so forth, even if I like it. But to be quite honest with you, most people like myself, they don't have the knowledge to make a fundamental decision to know what the cost of a company is relative to where the stock price is, currently. And I think that's really important when you invest to know, what is that company worth, in relative to share price. And, it takes some time to learn all these things.
Yeah, and it looks like Progenity. I don't have all my tools in front of me right now, but it looks like it's a biotech company, which
Yeah.
I don't think, are they making revenue yet, or is it pre-revenue?
I I looked at some of the information like online. It doesn't even look like they're really making much cash, and
Yeah.
they're
Yeah,
really
it doesn't look like
basically
they have a commercial product yet. So I'll tell you this. I mean, this is one of the hardest sectors in the stock market, biotechnology. Um, the people, I mean, it's very hard in terms of valuing the company, and it has a lot of risks. I mean, there's two ways to do biotechnology companies. People who do it well over a sustained period of time, and those two ways are, well, one of the ways is to trade anticipation of events. It's almost always a mistake to buy a biotech after they report some sort of result, right?
right,
When they're like trial data or something like that, right?
right,
You almost like it'll gap up and then it'll just keep on going down, 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 down because they're years away from making money and they got to raise more money again. So the people I know who are successful at this, they trade the anticipation. So if they
right.
know, they'll have their calendar up and they see, hey, they're supposed to present some data in 2 weeks. They may buy the stock,
Well, this
five
is a
days out.
short squeeze candidate. It's like
That's
everyone's talking.
another story, which I'll get to, and
Yeah,
you get that a lot, with biotech companies like this are very very highly shorted. This is 17% shorted, and in this case, I'm just going through the news feed, and it could be just rumor driven, like you said, things going around in social media,
right.
someone
With
throwing a
Pfizer
rumor out there in order to cause a short squeeze,
buyouts. Yeah,
and sometimes it's legit and sometimes they're fake rumors, so this is notoriously known to be, hardest sector to trade in, I think, is biotech. And again, the best way to do it is to buy ahead of events and sell either probably right before the event, right? They're supposed to present data on a Monday, so buy the stock like 2 Mondays before and sell it the Friday before the event. So
right,
that's the most successful people I know in biotech. They do that. The other method of biotech investing is really like venture capital investing, right? Where you'll get like 10 stocks and you'll just invest in all of them, and five of them will go bankrupt, and three of them will be like break even, and two of them will be up 1,000% or 2,000% after 5-10 years, and that's how you make your money. It's a very 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 difficult sector.
right. Oh, thank you for your time.
Yep. All right, so let's recap what we learned, last week and this week. So we talked about, the efficient market theory that story trading has, and when we say that again, we're really talking about markets being rational, and you can make sense out of markets, and that's what we mean by efficient. That you know everything makes sense. Every price every day is based on the net market opinion of these four pillars. And again, the implication of that is you can learn a lot by looking at the chart. You can learn about What are the things that are going to cause a stock to go up? What are the things that are going to cause a stock to go down? So that's the story trading view. And we are trying to disrupt how, people trade, technical traders just based on technicals, even fundamental investors and hedge funds that are only looking at fundamental value. We want to disrupt that too. We talked a little bit about this last week, that sentimental value is legitimate. It's valid. I can't wait, and maybe we'll come up with the schedule for next week, but over the next 4 weeks, excluding Thanksgiving Eve, we're going to be talking about each of these 4 pillars. I'm not sure when we'll do the sentiment one, but sentiment one is my favorite. And again, we touched on it last week in that I believe the sentiment value of a stock is a valid way to price assets. Why should a stock only be worth how much dividend it's going to give you? There's so many reasons to hold a company. And if, all the people out there in the world are saying, I want to hold this company for X, Y, and Z sentimental reasons, there's nothing wrong with that. That's what gives art value. That's what gives crypto value, or whatever it is. So, I can't wait to talk about sentiment. Man, I'll give you a little tease. I would even dare say that people who invest based on sentiment, that sentiment is a forward-looking indicator of fundamentals. That's what it's really about. It's not about your emotions. I love this stock. I hate this stock. That's not sentiment. Sentiment is speculation of future fundamentals. It's speculation that the TAM is going to be really huge. Speculation that management's really going to execute. Speculation that this company is going to get a big market share. That's sentiment, and that has value actually for long-term investing. And institutions and hedge funds, they've been missing this for years. They haven't understood this, and now they're getting burned, because now there's 30% of the market is retail investors, and they're bringing this sentiment into asset values, which I think is totally legitimate to do, and they don't understand it. They're getting, screwed by shorting things. They don't understand why certain stocks are so overvalued or certain stocks are so undervalued, like GoPro, right? And I would argue in a lot of these cases, retail's right. Stocks shouldn't trade just based on what's in your financial modeling and your spreadsheet. It should really be trading based on this aspirational value of what could this company be worth 5-10 years from now. Are they changing the world? Are they not changing the world? And that has to have a value, and that's totally legitimate. And that's sentiment. I can't wait to have a whole 1 hour just on sentiment. Jared, sorry, we lost you, and you're back. I don't know if there was something you wanted to add, Jared.
Sorry about that. I don't know what's going on with the app today. I wanted to jump back and talk a little about TRT, because I didn't get to
Sure.
explain my thought on that. So one of the things that I like to look at is how the stock is trading on the daily, if it's going to be a short-term trade. And I think this one's destined to be a short-term trade for the fundamental reasons that Ben mentioned earlier. So if you look at day one, what happened on day one? Day one is the stock went up throughout the day on pretty significant volume. What happened on day two? The stock went up throughout the day on pretty significant volume again. What happened on day 3, which was today? The stock opened down, it came back on pretty significant volume, it hit a new high, and then slowly started inching downwards on declining volume, and then finished the day well off that high and just barely green. You see the difference there? So that was the reason why I sold out of TRT today. I locked in a gain of, I don't know exactly what my gain was, something like 25%, which is obviously really nice for less than 24 hours. And I thought to myself, this isn't what I want to see. Now, it could end up recovering tomorrow or the next day, or maybe if we get even a little bit more of fundamental information, which connects them to an electric vehicle or something, then yes, it's going to explode. But in terms of the news that we have right now, it appears that the cycle of more and more people finding out about the stock and buying it and sending it to their friends and buying it, and the excitement building throughout the day, as we saw in the first 2 days, that does appear to be petering out. And because stocks like this can be so volatile, I would say don't rush into something unless you feel confident that it's going in the direction that you want it to go in, I guess.
Yeah. I noticed that volume petering out, and I did shave my position off in the afternoon at much lower prices than you did. I guess you anticipated. I don't know. You were probably watching it like a hawk, but in the afternoon I noticed that the volume was kind of dying, and we didn't really have that follow through and volume the first 2.5 days. So I sold like 20% of my shares, but I still have a very large, actually, very large trading position. We'll see what happens. There was a Twitter space by Wolf Financial just before this one, and they had a guest there from Stock Talk Weekly who was talking about TRT, and man, he was very bullish, and he was telling this whole story, and he said he spoke to the CFO, and he thinks, you know, that they're going to grow the business, and they're in a very hot time period, and you know, there's like 550 live listeners to this, so I don't know, just based on the influence of that account and everyone listening, it could maybe resume tomorrow. I'm not sure, but I would not chase a stock like this. Like, the only reason I'm in it, I got in at like 770, 760, which again, I felt that's a safe kind of base. If you look at the risk reward, you know, the downside historically not going to be much lower than 5, and the upside, if it does play out, could be 20, 30 bucks. So I feel pretty good holding much of my stake when I got in at that price at 770. But I would not chase a stock like this. You can really get into trouble by chasing. This is a unique situation with 2 million shares in the float, and anything can happen. Yeah, it could go to $20-$30 in a few days, but then if you chase it, you can be killed. You can like get in at the wrong time and lose 50% of your money in like 3 hours, right? So you got to be super careful with the stuff like this.
Yeah, and let's not forget, for those of you out there who aren't necessarily math people, if you lose 50% of your money, you need to find another stock that goes up 100% just to break even, because that's how compounding works. If you go from $100 to $50, it takes 100% move to get you back up to $100. So, you know, protecting yourself from big unnecessary losses is like a key part of protecting your portfolio.
Yep, good stuff. And you know, and after we go through the series of, you know, our philosophical talks on our 4 pillars and efficient markets and the charting, we'll get into more practical stuff. I know, Jared, you're eager to get into that kind of stuff, and
Yeah.
allocations and options and different strategies.
Yes.
So we will definitely get into those topics in a few weeks from now.
I'm looking forward to it.
Yep. All right, guys, listen, everyone, have a great night.